The Fed finally cut the Fed's fund rate by 0.25% to 4% from 4.25. They are projecting two more rate cuts this year, which is big news for real estate investing. GC, what is your first kind of reaction to this news?
Well, I'm just going to speak squarely from the lens of rental property investors. This is great news. This is the great thing because as interest rates come down, it immediately boosts our cash flows. It immediately boosts our return on investments. For any of us data nerds out here who actually track interest rate movement on a daily basis, it's really interesting to use this as a case study because what actually happened is rates started to have a massive decline in relative standards, but it was way before the Fed actually cut rates. And this is what happened. So there's a big difference between when the Fed signals something or when economic reports come out that signal something versus when the Fed actually makes the cut. And if you wanted to be ahead of the game and actually get the lowest interest rates possible, you would have needed to pay attention to the Fed. You would have needed to pay attention to those economic reports. Or more importantly, you would have needed to talk to a team of experts like our team or be a part of this show who could analyze and say, you know what, the movement in the mortgage market actually happened a few weeks ago. It dropped to a very low level. And then when the Fed funds rate actually dropped that quarter point, you know what happened, Pablo? Interest rates, the 30-year mortgage interest rates actually went up right afterwards. So all in all, rates are down, which is wonderful. And that's the punchline here. But there's also another punchline that, like, if you are waiting for the headlines or when the Fed actually made the move, you're missing out on the biggest opportunity. And that's really, I think, the value of a community and the value of surrounding yourself with experts as you are making financial decisions.